and welcome to EisnerAmper's Private Equity Dealbook podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Griffin Midler, Vice President, Private Equity at Bow River Capital, a Denver-based alternative asset management firm focused on investing in the lower middle market. Today, Griffin will discuss the transaction that Bow River completed with Landmark Aquatic. He will walk us through the processes along with both the opportunities and challenges faced when it came to the transaction. Further, he will also discuss how he navigated the due diligence process on the deal. Finally, he will share what Bow River is looking for in the buy-side process to better ensure that both mutually beneficial and efficient transaction can be consummated in today's economic and transaction market environment. Before we dive into the conversation with Griffin, don't forget to hit the like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Griffin. Thank you so much for being with me today.
Thanks. Appreciate you having me on. Happy to chat.
Absolutely. So to kick off the conversation, tell us about Bow River and how you got to where you are today.
Sure thing. You kind of covered it there at the onset, but Bow River is a broad-based alternative asset manager based here in Denver. We were founded in 2003, and for the past 20 plus years have been investing in a ton of different alternative assets across kind of what we call the rodeo region, which is the 14 contiguous states in the middle of the country. So we have a real estate strategy, a software strategy. We buy operating companies. We have credit strategy, evergreen strategy, and a recently developed defense strategy. And so while we have 6 different strategies under roof today, they're all separate investment teams with separate pools of capital. And I spend 100% of my time on our flagship middle market private equity strategy, where we partner with and really help grow human capital-based services organizations. So our assets go up and down the elevator every day. We've had great success investing in that space since our initial fund in 2011. We're on our third fund now, a vehicle we raised back in the summer of 2022. And so it's a niche of the market that I think a lot of people overlook just given the human capital aspect, but it's an area we like a lot and we've had success. And so it's been kind of a core tenet of ours over the last couple funds and will continue to be so in the future. So that's Bow River. Kind of in a nutshell about me. I took the traditional investment banking to private equity route after a few years on the M&A advisory side of the house with a couple different investment banks. I decided I wanted to move over to the capital investing side and really try my hand at helping businesses, specifically founder-owned businesses, grow and take the next step, which is exactly what we try to do every day here. I was always interested in how do you look at a business that has been bootstrapped for growth, professionalize it and take it to the next level so that it can go on for generations outside of maybe the first or second generation who founded the business and then it was passed down to a child or something. Really, how do you take them into the next phase of growth? And so that's really what we focus on here at Bow River. We love being the first institutional capital. We will buy from other private equity if it's an asset where we have a unique angle and there's a good fit, but the founder-owned aspect is something that we're really proud of and we really pride ourselves on being able to connect with them and really help them grow. So that's about Bow River. Myself, been here for almost 6 years now. And like you said, I'm a vice president on the team.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper. Let's get you ready.
Great, Griffin. The investment in Landmark Aquatic is quite exciting, and I would love to hear the story from start to finish on how you completed the transaction.
For sure. Landmark is a great story, and it's an asset we're all incredibly excited about. Like most good assets we have, the Landmark story began with a pretty simple meeting out in St. Louis. We trafficked in that market a number of times with a few different assets. And so we knew some players out there, and we were introduced to Ryan Casserly, who's now the CEO of Landmark a few years ago, and began talking about commercial pools. Ryan had acquired a business called Westport Pools a number of years before from the founder. He was working on growing that asset, but really wanted to take the next step and create something pretty special. And so he needed a capital partner to help do that. So we sat down with him and charted this plan for Landmark Aquatic. But at the time, we had just raised a new fund and we wanted to really accelerate the growth here. So we sat with Ryan and we said, look, well, we love what you're doing at Westport. They do everything from design engineering, new construction, renovation, and service for commercial pools. So they own the whole customer life cycle, which to us is extremely attractive. We loved what he was doing, although it was just a St. Louis, Kansas City business, and we wanted to think a little bit bigger. So over the course of the next 12 months after that meeting, Ryan scoured the universe to find like-minded, similar pool companies. And that's how we met Progressive Commercial Aquatics down in Houston. And so we had a conversation with both businesses, both Westport and Progressive, and said, look, there's an opportunity here to merge both these businesses, create something pretty special and put it under a new umbrella. And that's really how Landmark came to be. And so once we had the meeting of the minds between Russell Leto, who was the president over at Progressive, plus Ryan Casterly at Westport and us, we charted this vision on how we could create Landmark. And we worked for about 6 to 9 months to get the transaction over the finish line, completed all of our due diligence, branded the new Landmark company, and then formally closed on that acquisition a couple years ago. So it was a great story. Two really fantastic businesses, really great operators up and down the spectrum there. And there's an opportunity to do something really special in commercial pools. Nobody has done anything like that. And so we're excited about where the asset can go. But it was a great story where both proprietary deals, we were able to chart a vision with the management teams outside of a banked process, which we like because it gives us the most access to management and we can really get kind of our teeth into the growth plan sooner rather than later. But that's really how Landmark came to be. Super exciting. We're a couple years into it right now, and we're thrilled with the progress so far. And the road ahead is going to be really exciting.
Griffin, loved hearing that journey. And as a follow-up, what were some of the biggest opportunities you saw with Landmark?
Yeah, Landmark is interesting. I think as we looked at the trades specifically across the country, residential, plumbing, HVAC, electrical, that has been run up. Those multiples have gone to the moon. Similar with roofing. Roofing's another one, both on the commercial and residential side, where people have been chasing every single asset across the country for a couple years. So we tried to really hone in and look at what the next concentric circle there was. And that's how we found commercial pools. It has a lot of the same drivers that like commercial roofing has. Once that pool is in the ground, the non-discretionary spend that has to come with it is pretty robust. You can't have kids swimming in an unsafe municipal pool. The chemicals have to be right. The filtration has to be right. There are so many drivers that create a more recurring service model that we got really excited about with just the commercial pool space in general. So that, coupled with the fact that nobody had done this before, we were really the first movers in commercial pools when we put Landmark together. Just where it was a couple years ago, we were far and away the biggest player in the space. So we saw this really unique opportunity to partner with a fantastic management team and build something unique that nobody else had built or thought of before. And that's where we like to be from kind of the Bow River perspective, is that first mover. We have such an advantage when we can be the first into a trade. We can create size and scale and marketing, and we can really drive an outcome that is outsized relative to other trades that have been run up. We don't want to enter the game in the 7th or 8th inning, and we think the commercial pools industry is in the 1st or 2nd here, and we have a really special asset in Landmark that will help do that. And so big part of our thesis here was M&A. We wanted to find a number of like-minded aquatic assets that could join the Landmark platform. We're a couple years into the hold now, and outside of Progressive and Westport, we've added 3 now on top of that. So there's a total of 5 under the umbrella. There's a number of more that we're talking to. And so all in all, there's a huge opportunity here to create the first national player that can deliver at size and scale in the commercial aquatics industry, which for us is just extremely exciting. And we have a management team that's hungry and willing to go capture any and everything across the country to make sure we provide a sustainable business, not just for us, but for the employees that we send out in the field every day. That's what it's about. And that career mobility for them, making sure that they have a long-term home is really important. And now that we have, again, the biggest player in the space, we think we can provide that to thousands of employees.
Griffin, on the other hand, what were some of the greatest challenges you faced when it came to the transaction?
Yeah, there were the standard challenges, right? As we went through the diligence process, right? Founder-owned businesses, they always have accounting and finance challenges that you have to work through, insurance, benefits, legal. There were a lot of things where the founders never knew that they needed to save this form from 10 years ago. So there were certain things we had to work through there. But the biggest thing that we talk about and that we're focused on is culture is key when bringing these two assets together. And it's never easy, but I think Ryan and Russell were both fully committed to the future, and they helped tremendously there in terms of meshing the cultures together. At the end of the day, we sell labor and we're a people-based organization. So if we completed the transaction, the culture fell away, and then all the people left, we'd have nothing there. And so the ability for all three groups, really, the leadership teams of both assets plus Bow River, to sit down and have a conversation with the next generation of leadership and say, look, this is why Landmark is special. I know you've been at Progressive or Westport for whatever, 10, 15, 20 years. It's been a great home, but we want to provide something new and special. That was the biggest challenge for us, is just making sure we could bring those two cultures together. A bunch of great people in Texas, and then you got the Midwestern feel from Westport. It's always a challenge to bring those together, but the management teams met even pre-close. We charted out a path on what it would look like under the new ownership and who would be responsible for what, and they really came together nicely. And so I would say the biggest challenge is always culture. It's something we constantly deal with, but this was one where everybody was on board. They saw the vision and they saw how 1 + 1 could equal something more than 2, and they got on board pretty quickly.
Griffin, as a follow-up question, I know you briefly touched on this, but I'd love you to discuss the due diligence process used to complete the transaction.
Yeah. So we run with all of our assets complete due diligence. We generally start off with our quality of earnings, make sure the financials are what they represented they were before we kind of jumped in there. So we do a full quality of earnings. We do a full tax review. We had our insurance and benefits teams in there. This one was especially unique on that side because we were bringing two assets together. So while the QOE was two separate QEs and you just consolidate them at the end of the day, insurance and benefits was more tricky to make sure that we got the best of both worlds on the benefit side, right? We didn't want to go into one asset and say, hey, we're going to cut your benefits because we're going to move to one plan. We took the best of both worlds. So everybody got a net win, which was hugely important. And then we also ran our standard legal diligence to make sure everything checked out and that we were properly covered for the risk. And we knew everything was as represented in that purchase agreement. So we ran the full traps on that. I would say the one thing that is unique here and where we really focus is, for us, it's about integration and it's about what day one looks like. And so we don't use diligence just to check the box. In all of our reports at the end, we had a section of, this is what Westport looks like today, this is what Progressive looks like today, and this is what it's going to look like in the future, such that day one, we were able to hit the ground running. We were able to start that integration immediately rather than have to wait for a 30, 60, 90-day discovery session. We use the diligence process to really help inform what integration looks like.
Griffin, what are you looking for in the buy-side process to better ensure that a mutually beneficial and efficient transaction can be consummated in today's economic and transaction market?
Yeah, for us, especially on the diligence side, it's just complete alignment with our vendors that we bring to the table. They are a representation of us. So when the quality of earnings firm goes in, when the tax firm goes in, right, they need to understand what we're looking for, and they need to understand, well, yes, this might be the 100-item request list that we normally use. These are the 30 things that really matter. And with all businesses, especially founder-owned businesses, the diligence process is grueling. It takes a lot of time, but those guys are running a business at the end of the day. So we want to make sure that we're focusing on the right things, being efficient with their time to the point where it's not overly cumbersome, but we still get the answers that we need. And so something that we spend a lot of time on the front end is with every provider chatting about, this is what we're actually looking for. You need to identify these risks. These are the problems that could potentially be there. Here are the opportunities that we need you to help us build out, which I think it's helped us a ton, because at the end of the day, we need a partner on the other side of the transaction. And while we do the diligence process, we don't want them to feel like we're trying to find gotchas. We're really just trying to understand the business so we can be true partners after close.
Griffin, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
Yeah, I think you picked a good one. Landmark's a great story. Those are the type of deals that Bow River loves, to meet the management team, to chart a path forward, absent the noise of investment banks or any sort of broker. It just gives us more access to management. So that's something where we're very focused on the proprietary sourcing side of the world. We understand that won't be 100% of the portfolio, but it's a great opportunity for us to go in and build. And so, no, I think these types of transactions are ones we love. We love ones where it's founder owned. There might be a little bit of hair or there might be some noise here or there, but an area where we can figure it out together with the management team and we can all chart a path together where there's a great outcome. We're not the type of group that is just going to come in and say it has to be one way or the other. We like to be hyper collaborative with our management teams to drive to a great outcome for everybody involved. And Landmark is certainly has all the tenets of kind of a core Bow River deal that we look for.
Griffin, I wanted to thank you so much for sharing your perspective with our listeners.
Of course. Thanks for having me. I appreciate it.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.